Hello, everyone. I'm Jean-Claude BeyondMystic, and welcome to this week's Precious Metals Review episode. Today, with me, of course, Mr. Bill Holter. You can find his work at jsmindset.com, and also Andy SCHECTMAN. You can find him at milesfranklin.com. Bill and Andy, welcome back to the show.
Good to be back, JC. Good to see you, Billy.
Thanks for having us.
Well, I'm excited to have you on. A lot's going on since you and I last spoke. I wanted to go down memory lane a little bit with you guys here. We have some big news happening that, for the most part, is being ignored by our mainstream news. Of course, last year, both of you were featured on my series. It was called The Death of the Petrodollar. And at that point, we were talking about this Saudi Arabia and Russia agreement, ostensibly supplanting the petrodollar agreement that was put in place by Nixon and Kissinger. Now, we didn't know at that point. We knew that was the demise, but we didn't know with what it was going to be replaced. We're having inklings of that earlier here in the last 2 weeks, and this is what I want to talk about here. So, Bill, let me start with you since I haven't had you on for a while here. Explain, in your point of view, what just happened with Russia backing the ruble here with gold, and how that is forcing perhaps an arbitrage opportunity and maybe eventually here cracking the backs of the LBMA and the COMEX. Let's set the stage for the audience, Bill.
Yeah, Russia's done or announced two things. First, they announced that if Europe or any unfriendly countries want their natural gas, they're going to have to pay in either rubles. Well, the way they put it was they're going to have to pay in rubles, and then as a side note, or gold. Mm-hmm. So that was the first thing. That's obviously undercutting the dollar. They're not going to accept dollars for gas, and you would naturally expect that to move or expand to other commodities that Russia exports. Then the second thing was, and I believe it was the same day, but it was later, they announced that they were going to bid 5,000 rubles per gram for gold. And when they made the announcement, I think the ruble was like 90, 95 or something like that to the dollar. And I got just a ton of emails from gold bugs saying, oh my gosh, what happened? Why is the bid so low? And the number, if you did the math, came out to $1,450 per gold ounce. Well, what they didn't do, what they were looking at was the current price on the ruble. If you took the 30-day average prior to the Russian operation, it would have worked out to roughly $2,000 gold. Mm-hmm. Fast forward to where we are now, the ruble, I believe now is like 76 or 77 to 1. And that number equates to $1,970 an ounce. So what you've got is there's an arbitrage opportunity. On COMEX, it's 1935. And the ruble, the 5,000 rubles per gram works out to 1970. Now, fast forward to about an hour ago, Reuters just came out with a story saying that Russia is canceling that bid and they're going to negotiate individual purchases of gold. Mm-hmm. I would caution that it's not been announced by Russia in any way. It's not on the TASS or TASS news service. We've only got it from Reuters, and I mean, Reuters is just typical mainstream media. So is it true? I don't know. But a lot has happened in the last week and a half to 2 weeks.
Let's play it through, Bill. Is it possible? And I understand Reuters might be putting out a trial balloon here. They might try to cool down the markets here to prevent maybe the arbitrage until maybe they can legislate something around it. Who knows what they're trying to do? But is it possible also that seeing this new bid now floating the ruble, that the Russians are pushing down on the gas pedal and they're creating an even bigger arbitrage opportunity? Is that also possible, or do you think it's going the other direction? Or is this just a complete bluff by Reuters?
I don't know. It's too early to know which way this thing's going. The one thing we do know is that support under the dollar is waning. We do know that Russia is now for a fact selling oil and gas to China in yuan. So that's not in dollars. We also know that India has been in talks with Russia. So this thing is starting to spread out and expand, and it's all at the expense of the dollar.
Right.
And it's basically, I mean, if you think about this, this is the U.S. shooting itself in the foot by cutting Russia off of SWIFT.
Right.
I mean, that's a weapon that was threatened a few years back, and we said as soon as they made that threat that you don't ever give your enemy information on what you plan to do ahead of time. I mean, we used it as a threat, but what did that do? That allowed Russia plenty of time, and others plenty of time to set up other clearing systems,
right,
and respond basically. So actually
and
doing
now,
the cutoff, I think, is extremely dollar negative.
Right. And now we're seeing with the theater of war, another opportunity also for Russia now to maybe force the hand of the West here, asking for payments in ruble or gold. And now we're talking about the financial systems here, but at some point we have to get to where the rubber hits the road. We have all of these industries, specifically in Germany, who depend on these gas deliveries here. And now I think the decree by Putin was signed last Friday. So we're looking at potentially some devastating to the downside here ability to produce their goods in Germany and also for the rest of Europe. How long can they hold out and pretend that this doesn't affect them? At some point, we're going to have a capitulation. I believe Denmark already capitulated yesterday, but I'm not sure if that's true or not. Again, there's a lot of fog of war here. But what do you make of that? How long can Europe pretend here that they're just going to be okay with not having their delivery of resources?
Well, the ramifications have already begun. I mean, look at the price of coal. Coal now is at a 13-year high. And if you go back, just go back 5 years ago, at the end of the Obama administration, I mean, one of their biggest goals was to destroy the coal industry. And where are we now? We're at 13-year highs. So from the standpoint of nuts and bolts, you're right. I mean, Germany's going to have a real problem powering their industry.
And how does that translate to other markets here? We were just talking about gold, but we've seen some huge gyrations in the nickel sector here just in the last couple of weeks. We've had all of these halting of tradings. Basically, the system is blowing up here. And for a lot of naysayers, they're always telling me, oh, JC, don't worry, the States have this, the COMEX has this, they'll keep kicking the can down the road. Well, they didn't expect this to happen in nickel. How close are we perhaps to having this also happen in silver? Let me get you in, Andy, on that first, and then we'll get back to Bill.
I'm happy to answer that question, JC. Just to touch a minute on what Bill talked about. You talk about weaponizing the dollar, and when you weaponize the world reserve currency, you are in essence saying who can and cannot use the world reserve currency. You are incentivizing your foes to find another alternative, and the Chinese and the Russians have developed something called SIPS, the cross interbank payment system. It mirrors the SWIFT system. We already have talked at length about the Chinese petro yuan bond. As Bill had mentioned, they're buying, China is buying oil and gas, and just recently announced that they're buying coal from Russia as well, speaking of coal, in yuan. But that yuan payment system is immediately convertible into gold on the Shanghai Gold Exchange, which mirrors the COMEX. So you have a system being put in place, systematically putting pegs into place that are giving the Russians, the Chinese, the Indians, and many other countries incentive to de-dollarize, to move away from the dollar. And you know, when Russia and Saudi Arabia signed the joint military cooperation agreement, you know, little less talked about was the next day. Nigeria signed the exact same deal. Well, even less talked about is the deal that Nigeria just signed with China to actually sell their oil for yuan. You have the second biggest OPEC producing country in the world selling their oil for yuan. It's also part of the Belt Road Initiative, which is, you know, China's backyard. So you're being protected by Russia, you're being protected by China. You have China striking unilateral deals, usurping the dollar in energy with the biggest countries in the world. And you talk about the West of about 1 billion people, you have 7 times that throughout the world that are all being, I think, awoken to fascist type of governments that can make decisions like Trudeau did, or like the Fed did here, or our government did, pushing Russia out of the SWIFT system. And when you have the privilege of the world reserve currency, when you start to weaponize it to that degree, I think you are hastening the demise of the dollar. Now, to your point, nickel. Look, JP Morgan has had to come in the last 2 delivery months and pull silver out of their eligible category, out of their holdings, and put it into registered, or in theory, we would have seen that massive short squeeze that everyone talks about, because there have been more open interest contracts as to delivery, right up to delivery delay, or right up to the day where it could be delivered, than there is silver in the registered category. So are we going to face that nickel moment? You know, who knows if we are or not. The blowing up of the COMEX is something that a lot of us have talked about, and I really don't know how I feel about it, but other than to say we're getting a lot closer than we would have ever thought possible to that happening. When the last delivery month I looked, there was twice as many open interest contracts that could stand for delivery, twice, as there was silver registered category. And that's similar to what you saw happen in nickel, where, you know, you had a major supply squeeze. And could that happen? Yeah, absolutely. It would bankrupt Bank of America, who's short 800 million ounces right now on COMEX. And so there is a fight going on between not only the commercial banks, who I would argue are acting on behalf of the U.S. government, to squash the canary in the mine shaft. But at the exact same time, you are incentivizing everyone to de-dollarize. And here's your great reset, JC. Everyone talks about this great reset, you know, and when Klaus Schwab brought it up a couple years ago, I thought there's no way something like that could happen. But, you know, stocks, bonds, and real estate are all inversely correlated to a rise in interest rates. So if interest rates rise because you see a mass de-dollarization and no longer the dollar being the single world reserve currency. Heck, Jerome Powell just came out a few weeks ago and said, yeah, you know, there's room for more than one world reserve currency right now. He acquiesced to what we see coming. He's agreeing to it, that there will be a challenger to the world reserve currency. And when that day happens and all those dollars flood home, exacerbating the double-digit inflation we already have right now at the worst possible time, you're going to see rates rise. And when rates rise, you see the 3 pillars of wealth in this country collapse. But if that is in conjunction with a mass dumping of dollars, there's the 4th pillar. Stocks, bonds, real estate, and dollars all collapse if this narrative continues. If we see OPEC, if we see Saudi, and we see the rest of the world start to pay for oil and energy in other currencies. And I would argue that the actions that our government have taken in regarding to kicking Russia out of the SWIFT system will only hasten the demise of what is already a dollar choking, you know, for its world reserve status.
Right. Let me get you on this, Bill, as well, because you just mentioned Canada earlier, and I wanted to bring this up on the screen also. On one hand, Bill, you were talking about how this arbitrage opportunity might spark a lot of big players around the world to do the dirty work and to eventually maybe wrestle from the LBMA and the COMEX, the price mechanisms. But in this perfect storm scenario, now we're having these government overreaches that are freezing bank accounts. And you've noticed that, of course, at Miles Franklin, a lot of Canadian customers are realizing that their money is not safe in the banks, and they're trying to get precious metals as well. So let's talk about this U.S. Mint here now seeing the strongest gold bullion demand in 23 years. How is that affecting you, Bill, as a broker of precious metals here? What are you seeing on the market as a reaction from the normal people here realizing that their money is also not safe, let alone the inflation thing, but also now this government overreach in your face? Bill?
Before I talk about that, I just want to mention on the nickel subject, just understand that COMEX, if you want to call it, is very similar to the banking system in that it's fractional reserve. In other words, you could have, and it looks like there are in gold and silver, there's 300 paper contracts outstanding for every 1 ounce that's available to deliver. So I would suggest that all commodities are the nickel market, or they will become the nickel market. I think you're going to see a short squeeze in everything, and that will coincide with the collapse of the dollar at the same time. As far as gold and silver availability, I mean, that's a better question to ask Andy. I can tell you, I have over the last, probably 6 years, 7 years. I mean, I've really concentrated. Any American that wanted silver, I've concentrated on buying junk silver. And that's just about done, because in the last week, or in the last 2 weeks, I think a grand total of 9 bags of junk silver have been available, and I took every single one of them for my customers. I mean, so far this year, I've probably done, I don't know, 500 bags of junk silver so far this year, and the supply is basically gone. So, that's a product that is not minted anymore, but it's always been the canary in the coal mine. And same thing on the gold side, same thing with the numismatics, the Liberties and St. Gaudens, because they haven't been minted since 1933. They are the canary in the gold mine, because they haven't been minted. They don't have constant supply, and those are becoming much more difficult to find. And just over the last 2 or 3 weeks, the premiums have jumped significantly in both junk and the numismatics. And when I say significantly, I'm talking about going from we were like $6 over spot on junk 2 weeks ago. Now we're $8+ and the numismatic premiums have probably jumped, I don't know, $50 to $100 just in the last 10 days.
Wow, that's indicative of the demand here in Canada too. Most of our bullion dealers who deal in the Royal Canadian Mint products are all 6 to 8 weeks out to get new products on the shelf, and hoping that maybe they're going to deliver. So there is something happening there as well. Bill, while I have you on too, I wanted to play this interview of our ex-central banker, Governor Pelosi here of the Bank of Canada, with Evan Solomon. It's a 2-minute clip. I'll play the clip. It's not very loud. I'll try to do my best so you guys can hear it, but then I'll ask both of you for your comments on this idea of trying to hedge inflation. And what this guy actually is saying is absolutely ridiculous to me, but I'm looking forward to having both of your comments. So let's listen to what these guys have to say. Hold on a second here.
Banks, former central banker, are a key feature in Pierre Poilievre's campaign, and he had a big rally, 1,000 people in Ottawa recently, and he said, look, Canada should become the crypto capital of the world because Canadians need to be in charge of their own money supply. And he used the phrase, through Bitcoin, you could opt out of inflation. How do you interpret what he means by opt out of inflation by using Bitcoin and controlling our own money? What's your response to that?
Well, first, I think Canadians do control their own money through their own central bank and a very transparent process by which it's administered. But setting that aside, being on a Bitcoin standard would be very similar to being on a gold standard, except more volatile. And the gold standard does limit inflation. So if the price of oil doubled or something like that, all the other prices in the economy would need to go down in order to offset it. That's the sort of deflation that you get during a depression. And so it's why we had the big depressions were during the gold standard years, the Victorian Depression and the depression during the 1930s. Those would not have happened if we'd had a a more conscious monetary policy and expanded the money supply to meet the increased supply that came from the industrial revolutions. So I think there is a way around all this, which is to say we have an inflation control agreement. That's how Canadians control their money supply.
Okay, so they have an inflation control agreement at the central bank, and that's how Canadians can keep control of their money and hedge against inflation. Bill, what cocky how do you even explain this? What are your thoughts?
To be blunt, somebody needs to knock the shit out of that guy because he's either lying or he's stupid.
Well, I had Jim Willie on yesterday, and he said, "Of course, that guy's stupid." I'm like, he can't be that stupid. He has to be lying. He, of course, knows. And of course, the whole idea of the central bank, their only product is inflation, and so having Canadians avoid or hedge inflation is counterintuitive to their only mandate, which is to steal our purchasing power every year and to pretend it's only 2%. Let's talk about that really in reality. What's happening with their inflation? I heard your interview on USA Watchdog the other day. Explain to this audience group, Bill, what you're seeing in actual inflation and how, in fact, gold right now, if you look at its chart since 2008, has done quite well against the hyperinflation scenario that is being proposed now by our central bankers. Bill?
Well, first off, if you find an older dictionary, not a current dictionary, not a woke dictionary. If you find a real dictionary and you look up the definition of inflation and deflation, inflation is the overcreation of money, and deflation is either not creating enough money or actually money being withdrawn from the system. The government will tell you, oh, no. Inflation is the CPI index. The difference being inflation is caused by the central banks creating money. It's also caused by the Treasury borrowing money and putting that into the system. The CPI is only the result of the inflation. It's the effect. It's not the cause.
Mm-hmm. Okay, very good. And we're seeing it now, of course. They're telling us these small numbers, the 2%, the 4%. They have admitted here in Canada to 5% earlier this year. But of course, if you look at the work of John Williams of Shadow Stats, I've had him on the show before, it's a lot crazier than that. So just the other day, the central bank guy there, what's his name? The FOMC minutes, we're talking about this jawboning that they would perhaps get into quantitative tightening, which you and Jim Sinclair at JS Mindset had said can never happen, because once they get into quantitative easing, we're there until infinity. But here they're talking about multiple, not just one, 50 basis points hike this year. What do you make of that? Are we actually there because now they need to kill the economy, similar to what they did after the reverse repo, the repo market broke in 2019? Are they there again now where they actually have to crash the economy in order to deal with this hyperinflation? What do you think this conversation is all about with these minutes here?
Well, there is no possibility of actually tightening. There's no possibility of the Fed actually shrinking their balance sheet, because that would immediately lead to a complete financial implosion. Do they want a recession? Which I'm sure they wish they could create a recession which would ease the pressure on credit. But at this point, with the amount of debt in the system, how is the debt going to be serviced in a recession where cash flow shrinks? I mean, it's all a mathematical impossibility at this point, because at this point, you should be able to see and observe and understand that the whole thing is truly a Ponzi scheme. And the quote, new investors, that's the money supply. That's the new debt coming into the system. And if you actually shrink money supply, if you actually shrink the amount of debt that's being created, then what you have is a financial implosion, and that financial implosion within hours, if not minutes, spreads to the derivatives market. And then you find out that all these contracts that are outstanding cannot perform. And when a contract cannot perform, the value of that contract is in fact zero. Mm-hmm. So for them to actually try to quantitative tightening, it's a mathematical impossibility.
Let's talk about this news again in Russia, and let me get you in, Andy. In your last interview, Bill, you mentioned that what just happened is as big as what happened in the early 1970s, and yet it's not making our mainstream news, but we're seeing it here in actual demand for physical gold and silver. Andy, speak about the people right now who are in a mad rush to get rid of their dollars from their bank accounts as they are exiting the system or get out of the system, as Jim Sinclair said. What have you been seeing here? I know, judging by the order forms, quite a few people are panicking right now and no longer wish to hold the dollar. We're creating this lift here for the ruble with this new decree by Russia, and we're creating an increased demand for yuan also, but that in turn is diminishing the demand for the US dollar as we continue to print it into infinity. What's happening when the rubber hits the road here, and what are you seeing with your clients, Andy?
I'm seeing, there are a lot of people, JC, who I think feel something, can't articulate it. I guess if I were going to try to put words in people's mouth, I think they realize that if the Fed really was committed to fighting inflation and to normalizing their balance sheet, then like they were talking about in the Fed minutes, they were saying they're going to do it at sometime in April or May. If they're really committed to it, why wait until April or May? Why not just do it now? Why wait what is in essence 45 days to do it, to shrink the balance sheet? Why not shrink the balance sheet right now? If the Fed was really committed to fighting high inflation, I think people are starting to understand this. Why did they continue to grow their balance sheet? Not through quantitative tightening, but through quantitative easing. Why did they continue to grow their balance sheet after they acknowledged that inflation really wasn't transitory, as we all knew and laughed at the very beginning? If Fed was really serious about fighting inflation, why the hell do they only raise interest rates 0.25%? You got this, I forgot his name, this guy that you keep Bullard, I think his name, you keep hearing about him. He's talking about raising rates 50 basis points. And in fact, he was saying, well, that, really it should be 300 basis points higher. But even at 300 basis points, so you put the federal funds rate at 3.5%, you're still negative real term when you factor in inflation to a 3.5% interest rate of negative 6% or greater. And, as you were saying with John Williams, that the CPI numbers are completely bogus. They exclude food, energy, and housing. Food is expensive as hell. Go buy a few steaks and see what happens. Gasoline in California, I was just there a month ago. I filled up my rental car. It was $6.50 in San Diego. And everyone's house has gone up so much that this wealth effect thing, everyone feels wealthy, yet none of these things are talked about in the CPI. And I think people understand this inherently. And I think people are freaked out. They're freaked out that they realize that the Fed is trapped and that they have nowhere to go but to continue to inflate. And so you have people who are both scared to leave money in the bank. When you talk about risk reward, being compensated for the risk of leaving your money in a bank that can bail you in and in a money market can gate you, and you're watching the value of your dollar depreciate by double digits every single year. I mean, you try to figure out what the real rate of inflation is or the real amount of money creation. Bill said something, and I don't think people quite get this. In fact, when I read it, I had to fact check it. I talked a lot about last year. I remember saying last year that 50% of every dollar ever created was done so in the last 2 years. Those numbers have been updated to 80% since 2020. 80%, and people can Google it, of every dollar in circulation was created since 2020. An increase in the money supply is what inflation is. It's not the greedy oil companies It's not supply chain. Those are all issues that are corollary or cursory, but they're not the issue. The issue is a government that is and markets that are like a heroin addict, are addicted to the stimulus, to the money creation, and it won't stop. Because if they do try to raise rates, everything implodes. And this is why I think, going back to what we were talking about earlier, the biggest thing that people need to focus on is the loss of the petrodollar status. This is not just something to gloss over. If we lose the petrodollar status, the market will do the work for the Fed and will blow everything up. Because when all those dollars come rushing home and you see a massive amount of inflation, rates have to rise to compensate for the loss of purchasing power. And so you will see rates rise to a level that will blow everything up. There's your great reset. Is it possible? Absolutely it is. And the Fed, who jawbones and says we're going to get tough on it, they're not going to get tough on anything because they don't want to be the ones that break the entire system. Instead, they are pushing our adversaries into doing it themselves. And maybe that's part of the plan. Maybe it's, hey, it's those effing Russians or those effing Chinese or whatever it is. They did it. No, we did it. We did it. We precipitated it. We pushed the Russians right into the open arms of the Chinese and their SIP system. Don't think India doesn't see that. Don't think all the Gulf Coast states, countries don't see that. And they're thinking, are we next? Is it our assets that are going to be frozen? Are we going to be kicked out of the SWIFT system? We are precipitating and accentuating and accelerating the demise of the dollar. It's not the Fed that we need to focus on because they're liars. Everything that they tell us has been a lie. From the subprime crisis being contained by Bernanke to inflation being transitory to everything that they tell us, it's a lie. But I will tell you, the market is bigger than the Fed. And I think we are witnessing, in my opinion, the beginning of the end of the US dollar. And when that happens, where do you run? Where do you run any longer? And so I think this is where precious metals come into play. It's not to get wealthy. If you look at the folks, and we've talked about this, and I know Bill knows about this, Morningstar owns a group called Ibbotson, who used to be a consulting company. They were bought by Morningstar out of Chicago, who did research saying because interest rates are where they are, stocks and bonds are no longer inversely correlated. This 60-40 split that everyone has, the pensions have, the insurance companies have, the 60-40 split of stocks and bonds, it's the death knell. And in fact, because interest rates are so low, and if rates rise, everything collapses. And they came out and said the only inversely correlated asset class any longer to the U.S. stock market are precious metals. It's about retaining. It's about preserving. It's not about getting wealthy. One other thing I wanted to mention, the law of unintended consequences. When you had talked about the U.S. Mint not being able to keep up with demand, the reason that silver eagles are the way they are at $14+ over the price of silver, with the purchase price being probably $9 over, somewhere in that neighborhood, it's because the U.S. Mint is not allowed to go into the open market and pay market price for silver above the worldwide price of silver between the LBMA and COMEX. And so you have a bullshit price on COMEX and LBMA. And no one wants to sell the bars, the 1,000-ounce bars that get turned into blanks, to the Mint. They don't want to. So the Mint cannot go into the open market and say, we'll pay $1 higher. No, the Treasury Secretary has to allow that to happen. And a country that wants to kill the canary in the mine shaft ain't going to let that happen. So what you're seeing is a concerted effort by the U.S. to hold down the price of silver and to not allow the silver eagles to be produced, even though it's law. Because at the same time that it's law saying that they are obliged to produce as many as there is demand for the public, at the same time they're not allowed to pay over the market price. Spot. No one will sell it to them for that.
Right.
When you talk about demand, I've been saying for 1.5 years, and I catch a lot of shit for it. People say I'm talking my book. No, I'm really not. This market will be defined by an inability to source product. On one hand, you got people say there's plenty of silver. It's the production. They can't keep up. The refineries can't keep up. And I don't know that I believe that. But okay, let's say that's the case. For the past 2 years, the demand has so greatly outpaced the supply that all roads lead to the same place. And what I would argue that people aren't thinking about is that this is a global phenomenon. You have inflation at all-time highs since World War II, anyway, in the United Kingdom. You got them at 30-year highs in Germany. You got them at multi-year highs in Japan. The whole world is waking up to sanctions, to fascist decisions by governments that are supposedly democratic or socialist. And at the same time, I think people are realizing that inflation is here because the central banks are trapped unless they want to blow everything up. So you're seeing a rush to buy gold and silver, and it's happening. Rates or premiums are the highest I've seen in 32 years ever, across the board. And on sovereign issued coins, Britannias, Philharmonics, Kangaroos, Krugerrands, you're talking in most cases 3 to 6 weeks to get it. Who wants to pay right now highest premiums I've sold them for in 32 years and wait 4 weeks? US Mint, it's not any better unless you want to pay $14 because they can't produce any. Because they can't go into the open market because no one will sell it to them. So yeah, we're witnessing record demand at a period of time where I think we are this close away from that seminal moment where we cross the Rubicon, where something happens where the dollar is now the pariah and forsaken and massively dumped. And when that happens, all of these people out there who think I was talking my book, or all of these people out there that look at buying metals to get wealthy, will wake up to the realization that metals is wealth. It's not to get wealthy. It is to protect yourself from governments that have gone crazy. And because of these decisions that they've made over the last decade plus, have backed themselves into a corner that I really don't see escape from. So when I talk about product disappearing, I'm looking 3, 6, 9 months, a year out. I started talking about it a year ago. The premiums have done nothing but escalate. Delivery delays have done nothing but escalate. Getting product has been nothing but more difficult. Bill talks about junk silver. This is emblematic of a bull market in metals because no one wants to go back into fiat because it hasn't been produced in almost 60 years. No one wants to sell it. They don't want to go back into fiat. You can't dig it out. This is why they say there's no bull market like a metals bull market, because it speaks to our concern. And I don't think people are freaked out enough yet. Just the pimple on the elephant's ass that Bill and I have been talking to for the past 25 years, 30 years, those people are already freaked out. They've been freaked out long before anyone else. But they're still freaked out, and they feel justified in that concern. And I think they see it coming clearly, as I do, as Bill does, and as you do, Jean-Claude. And when it happens, it's going to be far too late. And that's what I really want to get at, because, junk silver used to be called junk silver because for 15 years or more, in the beginning of my career, I'd buy it for under melt value. It had no premium. In fact, the dealers were happy to get rid of it and send it to us. And now it's the highest premium silver item next to silver eagles on the planet. I used to have dealers, big primary distributors, that would call me up and say, Andy, I got 50,000 Philharmonics. I'm going to send them to your warehouse. And I'd say, hey, Mike, I don't need them, man, but appreciate it. No, listen, let me send them to you. We'll put them in the corner of your vault. Don't charge me for storage. And we won't charge you for them unless you need them. If we need them, we'll pay to have them shipped out. Okay, fine. Go ahead. We'll do that. Now, to buy Philharmonics, you're paying, as a dealer, $4 or $5 premiums 90 days out, fully paying everything for 3 months, hedging it and running logistics, and hopefully getting them after the 90-day period. This is a new reality. And it's because it's not just the people in North America that have been awoken to what's happening. This is not just North American centric. This is global. And I think people are realizing that central banks, fiat currency, and Keynesian economics are coming to the end of their cycle. And that's why you own metals. That's why it's becoming hard to get. That's why you're seeing delivery delays. And I would argue it's not under capacity in the ability to make blanks or to produce a refined product. Look, capitalism says if you have that much damn demand, you go hire more people. You get more machinery because you make lots of money. Well, if that's the case, I mean, you're not seeing it in this industry because it's every single week premiums are rising and it's more difficult to get product. And I think it's a trend that we'll see at least through this year and unless things change, it will only exacerbate out into the future.
I agree with you, and it's accelerating. You said something about the seminal moment crossing the Rubicon. I would argue that every day, every hour, we are crossing it now. It's not a question of when, it's somewhere in the future. It's actually happening now. And Bill said something about soon here, every commodity market will be acting like nickel. And I wanted to bring this up, Bill, with you, because this quote here, gold is money, everything else is credit. And once you realize this, you'll never be poor again. This is an old quote by JP Morgan. But you mentioned also how when this all blows up, you talked about the derivatives, the credit system freezes. Now, in that event, it's not just that things are very expensive right now because of hyperinflation, but it's also the ability to source product. I think people don't really realize yet some of the potential Mad Max scenarios. And it doesn't mean that it's forever after, but we might have some difficult times ahead of us in sporadic temporal events here, not just in North America, but around the world. Explain that a little bit to the audience here, how credit runs everything. And once this freezes up, if you don't have what you need, you're in big trouble. Bill.
Right. Everything runs on credit. Everything you do. I mean, just walk around your house. Go throughout your day, and everything you touch, everything you use has had a use or many uses of credit to produce it. The gas that you put in your car, the electricity for your light switches. And I mean, I typically use a loaf of bread as the most simple example. There's got to be at least 10 or 12 uses of credit to get wheat from the field into a loaf of bread that's actually gets on the shelf. I mean, you've got fertilizer costs, you've got seed costs, you've got diesel costs. Then the harvest, it goes to silo, the silo's on credit. Then it goes to the production's on credit. And don't forget about shipping between each of these. You got trucks that are bought on credit. Everything runs on credit. If credit ceases, everything day-to-day life ceases. And I do want to mention, Andy, you used the term the system blows up. Just to illustrate that, interest rates over the last year and a half have definitely gone higher. I mean, look at the 10-year Treasury. It got down as low as 0.38%, 0.38 of 1%. As of right now, it's 2.65%. Now, let's just use a number of 3%. If the 10-year Treasury and basically, let's say the yield curve across the board is flat and at 3%, what does that mean to a $30 trillion debt? It means that the debt service ultimately over time is $900 billion per year. And if you go back 30 years ago, 40 years ago, the government was spending, when we had 15, 18% interest rates, the government was spending $400 billion a year to pay the interest expense. And the debt started increasing, but at the same time, interest rates were going down. So they were able to manage to keep the debt service between $300 and $500 billion for the last 30, 40 years. Now, all of a sudden, that number's up in the $600, $700 billion range, and interest rates moving to 3% is going to create, we'll be pushing $1 trillion a year just in debt service that's just paying the interest, which means that, it becomes a hockey stick as far as the debt service is concerned. And now that's as far as the government is concerned. But think about all of these financial derivatives that when they're originally created, when they're originally issued, they have an interest rate assumption. And the interest rate assumption for the last 5 years, 8 years, 9 years, whatever, has been what? 0.5%, 1.2%, whatever. All of those assumptions are embedded, and higher interest rates will blow up these contracts just on their own because what higher interest rates do basically is they create margin calls. And the entire system is going to get a margin call whenever you get a margin call, it's always at the worst time. And the worst time is when we're in a recession, when the cash flow is not there and the margin call cannot be met. And when the margin call can't be met, everything comes down. And guess what everything is? Credit.
You know, it's a really fresh take you have, Bill. You're the only one I hear talking about it. And when you think about it on the loaf of bread analogy, it's very true. The use of credit. And you can see that happening, no question about it. The banks are reluctant to lend money out into this economy. And at the end of any massive expansion in credit, you have a contraction. And when that happens, there's going to be problems. And if you think that there are supply chain problems now, just wait until you see a contraction of credit, as Bill's talking about. And that's maybe where you get into the food shortages. And, you know, we tried to buy a new refrigerator, and albeit it's a nicer one because we have to kind of knock some walls out in our kitchen due to a water issue, and figured might as well get a new refrigerator. We were told 1 year to buy a Sub-Zero refrigerator down here in Florida. 1 year. Mm-hmm. So when you talk about supply chain problems now, just wait until you have no more credit. My daughter got into a car accident first week of school in September, and we're still waiting for the bumper for the car. You know, we're talking months out now. So I don't know. It's I think what you're talking about, Bill, really is something people need to think about. You kind of opened my eyes a little bit to that. I know you and I have talked about that personally, but you can see that coming, and I think that's something people really need to think about, because when you see the contraction in credit, which will ultimately happen, that's when you will see a massive exacerbation in supply chain problems and in a smoothly running system.
Well, here the central bankers were saying that, oh, it's because of gold that we had a depression. No, it's because you guys retracted the money supply and caused all of these issues. And perhaps this is what's just around the corner. Bill, I wanted to ask you, I'm a member here of the gold premium service on JS Mindset since the offset. I absolutely love these weekend calls. And on top of that, you are writing again. So it's exciting to read your words again, Bill. But in this particular call, you guys are talking about well, you talked about the arbitrage here, and there's an opportunity there for the sovereigns. But how do the little guys, the people watching this show, how do we play this right now? These are perilous times. What are you saying to your members here on how to not just hedge inflation, but be prepared for this credit freeze and what that means in terms of availability of sourcing your products? What's your best advice to the audience watching the show?
Yeah, as far as the arbitrage, I mean, the average person, there's no way to arbitrage it. I mean, the whole idea is just basically buy gold, buy silver, and get your money out of fiat now. We have told people that they should get out of the system. And I mean, my advice, I can only tell you what I've done over the last couple of years after, as soon as COVID hit, we moved away from populated area. We're in a non-populated area. One of the things, and we basically totally redid the place that we bought. What I've done is I've gone out and I've bought enough parts to completely repair 2 air conditioners. I've bought parts to completely repair one of my 2 water wells. Bought car batteries. Bought tires. What you want to do is buy things that you know for a fact you're going to need in the future, because you're going to need them, but you're not going to be able to get them.
Right.
And I mean, obviously that includes food. That includes, and just go through what you know you're going to need to use in the next year, 2 years, 3 years, and start. I mean, if you have the financial means to do it, start to plug the holes if everything stopped, if you couldn't get anything, what are the things you're going to need? And make that list and start checking it off.
Right. Well, that's good advice. And speaking about censorship, you and I have had some issues in the last couple of years doing these episodes with YouTube. you guys have just finally now put up this great new compendium. Explain that to the audience members who are maybe new to this and wish, of course, there wasn't a censorship machine that deleted all of our past videos, but you guys at JS Mindset have put this compendium together here that includes how much information is on this compendium, first of all, and why did you guys produce this product here for the audience members, Jim? Bill.
Well, there's over 11,000 posts. It goes back to 2008. It's everything that was posted on JS Mindset since 2008 through not quite the end of last year. Our thought process was twofold. First, I don't think we'll be doing this a year from now. I think the system will be down. It will be censored, what have you. So what we wanted to do was we wanted to offer all of our posts in the compendium form. It's basically just a USB stick. And if you think about what's happened throughout the last 10 years, in particular the last 5 years, and even more in particular the last 2 years, all of the censorship issues, there's no telling what history is going to look like 20 years from now, 50 years from now, 100 years from now. I mean, even to this day, we ask, how could the German people have been so stupid in the 1930s to allow what happened? And that's what's happening here is, how could we be so stupid to allow what's happening? So the reason we did the compendium is in the hope that 20 years from now, 50 years from now, some of these things will turn up. Because what we've done basically is it's been a real-time financial, economic, real-world reporting. It's the truth as we viewed it, as we, we believe it was, our opinions were 100% the truth. So somebody who looking at this 20 years from now, 50 years from now, could see the compendium, see the stuff that we posted versus what the history books say. I'm hopeful that things turn out well and history is reported correctly, but hope is for dopes. I kind of suspect that. If you go back throughout history is written by the winner,
right? And
that's what history is, his story. So it's not hard and fast, true information. Whereas the compendium is, it's real-time reporting of what was going on.
And I have to say, Jim, both you and Bill and the boys over there, you're being proven every day to be truthful and earnest with your analysis of the situation. What was once conspiracy theory is now conspiracy fact over and over and over again. So I do recommend folks you go check it out here at jsmindset.com. There you can find the compendium, and you can also try the premium service. There's also a free side to the website for now where you can find some of these amazing articles to educate yourself as to what is going on now. Now, Andy, before we go, we just mentioned that one, of course, of the tactics now to try to navigate what is to come is to get physical precious metals into your own hands. You are one of the lucky ones here to be able to sell and to continue to source the Royal Canadian Mint products. You have the 100-ounce silver bars on sale now at $445 over spot. Andy, what's the delivery time for this right now? And is there any other products also that you would like to recommend to the audience, maybe who are looking maybe for junk silver if they can? Also, what's going on, Andy, with the inventory?
Yeah, I saw one of the questions in here. Someone said, what is junk silver? Just real quick, that would be dimes, quarters, and half dollars minted prior to 1965. But they're basically unobtainium right now. It's and stupid premiums. These are brand new 100-ounce. Yeah, Billy bought them all up, and he placed an order for a client a month or two ago, and killed every bit that we had, everything we had coming in. And I made phone calls to every dealer that I've known over the last 30 years to beg them to let me get it all. And that's what it's like. I mean, it's not junk anymore, not even a little bit. The 100-ounce bars are brand new. They're already on a truck to me. They'll be in my warehouse Tuesday. I was able to secure an awful lot of them. I bought basically the rest of their allocation to North America. and we're going to have 1,000 of them in our warehouse on Tuesday. Okay. And this is what you have to do in order to get product. You have to be able to write a check for 100,000 ounces of silver. You have to be able to hedge it, run logistics. And so unless you're near the top of the food chain, you're dead in the water. Yeah. Small shops, medium-sized companies like this, you're dead in the water. Dead. You will get nothing. The dealers don't want to screw around anymore. The primary distributors or the mints, they'll be like, here's what we got. You want it? Okay, send me a big wire and do it right now, and you'll get it in a few weeks. Well, it's on a truck already. We'll have it on Tuesday. They're fantastic. They're brand new. They're the nicest 100-ounce bars that there are. This is going to sound weird, but they're really sexy. If you were going to show someone, a friend, let's say you had a friend that you've known forever comes to your house and you want to show them something, they're amazingly cool. JC, I know you've seen them before. Yeah. So we will have those in stock on Tuesday for immediate delivery. This would be for the United States. It's not up in Canada.
Right. And for the and for the Canadian audience, we have the mfbullion.ca website affiliate program now, and still we have these 10-ounce bars on sale here at $5.95 over spot Canadian. So that, of course, is for the Canadian audience members. Andy, before we go, also let's give an update to the audience here on this new BeyondMystic silver bar. The production, our very first production of our BeyondMystic bar here. How close are we to the die reaching your warehouse and us stamping the very first bar, Andy?
I'm expecting the die tomorrow, I believe. So just to give everyone an update, we've gone back and forth with your artist, your graphic designer, and we've had to go back and forth on both bars in order to make it the way that you see it, envision it. Both have been approved. Both were sent to the die maker. We're expecting both dies back tomorrow. If not tomorrow, then the very first part of next week, we'll put it into the machine and start cranking them out.
That's very good news, Andy, because I keep getting emails. Everybody who's filled out the pre-order form here about a month ago, they're all excited to get their products. And so don't worry, folks. This is me, Jean-Claude, telling you that as soon as I know that we've stamped the first bars here, I am going to email each and every one of you through our MailChimp program here, letting you know that if you still wish to procure these on pre-order, you will have first dibs on this limited production run. We'll give you maybe 2-3 days to place your orders with Andy through a new online booking form here on beyondmystic.net. And then from there, a couple of days later, we will open it up to the public. But don't worry, you guys who filled this out first, a big thank you to all of you for supporting the show. And of course, you will be notified first before this goes to the general public. So thank you, Andy, for that update. Go ahead.
JC, real quick, I'll tell you that the second design, to me, there's some of the neatest look. I think they'll be incredible. I mean, I can't wait to buy a bunch myself. I don't think they're a novelty at all. I think that they are amazing, and I think people will absolutely love them to pieces. So we're excited to be able to offer them to your people, and I would say that we're basically ready to start taking orders whenever you're ready to create the form, right? So people can order them. And I know that you have people who have already expressed interest that you want to offer first dibs to. So as it is right now, this is a new endeavor for us. We're basically able to produce about 1,000 a week, and that's in an 8-hour shift. We are going to go to 16 hours day and night shift and ramp it up to at least 2,000 a week here very soon. And as we get more proficient and learn more about this machine, we ought to be able to hopefully increase that amount. But I appreciate everyone's patience. I know we've been saying it's coming, it's coming, it's coming. One thing that I've learned, not only in this industry, but in this environment, is everything takes longer. Everything takes patience. But we're here, we're there, we've got it done. The mold's on the way, there's the machine, and we're ready to start taking orders and cranking them out as soon as you put up the page.
Very good. And I have to thank you, Andy, also for working with me. We're always trying to find the best possible price for our audience members. We're tweaking that right now. This is a different process. It's a different machine. So folks, again, Andy and I just need to do our work here in the next couple of days to put that form together for you. But I can tell you it's going to be a very competitive price compared to other products out there, and the quality of this one is going to be through the roof. Now, guys, if you want to get some precious metals, again, I created this special form here today, of course, for the Hi-Ho Silver. So that's beyondmystic.net/Hi-Ho Silver. Again, this is a way to support our friend Bill Holter here at JS Mindset. He is, of course, a broker of precious metals. He clears everything through Miles Franklin. So if you are looking for silver and also maybe some gold, please check out this form here today at beyondmystic.net/Hi-Ho Silver. Bill, before I go, any last words of wisdom for the audience members today?
Yeah, I guess I'll leave you with this. With whatever happens, I mean, obviously, I'm sure most of your listeners have tried their best to prepare. With whatever happens, whatever you've forgotten, whatever whatever base you didn't cover, don't beat yourself up, because everybody's, nobody's going to cover every base. Just do the best you can.
That's great advice, folks. I completely agree with that. I love you. Thank you so much, everyone, for joining us here today. This was, of course, another episode of Hi-Ho Silver with Mr. Bill Holter and our friend Andy SCHECTMAN. Please remember to like, share, and subscribe here on our third backup channel on YouTube. I love you guys. Have a great day, and we'll see you soon. Au revoir.